Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking interest rates and those 10-year note yields. Maintained kind of status quo today. It was a pre-jobs trade, very tight. We did see yields creep a tiny bit lower today, but it's very much waiting for the data, waiting to see if we're going to get an ADP like off the charts number, or if we're going to slip back into normalcy and see maybe an up 150 to 175,000 jobs. Basically, I think the market's focusing on just kind of the girth of the number, as well as the wages. Wages have been key because the wage acceleration has been so slow. That is really the core of inflation. If you look at it from 50,000 feet of what the Fed really wants as far as inflation goes, when you talk about price inflation, it starts with wages. So I think tomorrow's number becomes a real catalyst for where the next big move in bonds is coming. And right now yields are holding just above the year-to-date lows in yield. And what has that done to our friends over in volatility? Well, volatility is creeping higher. It has been creeping higher for about a week and a half. And so we're seeing volatility get back to the 14-day moving average in the 10-year bucket. It's been holding there for a few days, which is rare, especially when you have so much, when you have a big day of news. Typically the market will look to discount it the day before, and they're not doing that here. And historically, volatility has been going into non-farm payroll again. That hasn't happened in quite some time outside of a few numbers. And so we're seeing that this week, and I think that's going to kind of maintain its bid. Typically, we see volatility get crushed just before, just after a key number like employment, but I think this week it's a little bit different. If we look ahead, we've got yields holding at around 234. We've got a big sort of uncertainty market looking, as far as growth, as far as elections. Chair Yellen is speaking on Monday. She could be the great balancer if the market gets a little off skew based on what the jobs numbers say. And then there's a lot of geopolitical risks that are out there. We've probably read about them, whether it's Korea or Syria. There's a lot of issues that could really turn, and that'll keep the flight to quality bit alive in bonds. One of the reasons I think why yields have remained low for the last week and a half to 2 weeks is because of the fact that there's just that flight to quality bid. Hasn't been an emergency type of bid, or hasn't been a chasing the market type of bid, but you've seen steady buying, and I don't see that going away ahead of the weekend. Certainly we could see it go away next week if all is well, but ultimately the market now looking forward to the growth numbers, which won't come till April 28th, and then you have May FOMC, and you have the French elections sort of in there. So still a lot to come in the month of April, but we have to get through this jobs number first tomorrow. This has been Todd Colvin coming to you from the floor of the CME Group.